Ron William, he's the founder and the principal market strategist at RW Market Advisory. Ron, good to see you. Let's talk oil. We're right back up there, right back up above that $100 per barrel level, very close to 110 when it comes to Brent. Where are we heading?
Well, happy greetings one more time from Switzerland. I mean, following up with our expectations from last week when we spoke, Lisa, oil has broken higher in price and time terms. So if we look at the 12-month breakout pattern on crude, which also coincided with a cycle for 28th of June, we're now seeing a lot more upside. If we look at just West Texas as a proxy, up into the 2012 spring highs, spring peak highs, just there on the chart, of around $106 and $110. So they're the key targets to come. But in terms of magnitude, we are looking for a sizable extension of this move, which may potentially provide some sort of a intermediate exhaustion peak. So a potential spike in oil is basically what we're looking for on West Texas, and more specifically on Brent, which is the follow-up chart that we have there.
So a spike to where?
Well, I mean, up to $110 plus on West Texas crude. On Brent, I think there will be more upside in terms of volatility if we look at the spread of West Texas, Brent versus West Texas. And that, of course, is because of the high correlation with the geopolitical region of the Middle East and the increasing risks. So at the moment, the government change is constructive and let's say positive, but of course any further uncertain conflicts and any potential spillover onto the already fragile Arab Spring region will of course increase further risk premium on both of these oil contracts. But on the chart of Brent West Texas, one thing to keep in mind is that we already have seen a very big fall in Brent crude prices versus West Texas. You can see that the big fall, and that's actually hit a key support level around $4 to $5 in terms of the spread value between the two. And in my estimation, if we do see a consolidation here and a close back above $10, then that may suggest a further risk premium being priced in for Brent versus West Texas back into the Arab spring highs.
Ron, thank you very much. Ron William, founder and principal market strategist from RW Market Advisory.